Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Okay, but I would like to talk about the stock market, and in particular, the stock market in the light of the election results and the coronavirus pandemic that has been affecting the world economy. Um, as we know, the stock market likes certainty, but we are going through a period of great uncertainty, and this great uncertainty has led to enormous stock market volatility. As I talk today, the stock market is up 2 or 3%, allegedly, according to the news, as a result of favorable news about coronavirus vaccines becoming available. But when you think about all the stock market volatility, you have to realize that there are many sources of uncertainty affecting the stock market, and they interact in a very complicated manner. The big source of uncertainty that's been on everyone's mind for the last several weeks is the outcome of the election. And the Biden victory combined with the Republicans looking like they either going to control the Senate or almost control the Senate, that's something the stock market probably likes because it will induce the government to pursue very moderate policies. But let's look at some of the other sources of uncertainty that have been affecting the economy for some time and show up in the stock market. First, we have the coronavirus, and there are two big sources of uncertainty there. The first is that we don't know how long it's going to last, and the good news about the potential effectiveness of a vaccine today is what's perhaps sending the stock market up. The second is that the coronavirus has affected different stocks differently. Growth stocks, some of the big large cap growth stocks have done very well with the coronavirus because they have business models that operate online. On the other hand, many value stocks, including real estate like hotels and shopping malls, they've done terribly with the coronavirus because people are staying at home. So a second source of uncertainty is monetary policy. The Fed has pursued unprecedented monetary policy and quantitative easing, creating an enormous balance sheet and injecting a huge amount of liquidity into the system. This has made the stock market probably go up because it keeps interest rates down and it puts a lot of money in the pockets of people, that some of which flows into the stock market. A third source of uncertainty is the fiscal stimulus that has been talked about and has been kind of on hold for the last few months as the election occurred. The fiscal stimulus can affect the, can kind of offset some of the effects of the coronavirus, but it also, there's a bit of redistribution involved that's very political. On the one hand, the Democrats would like to use the fiscal stimulus to put money into the hands of lower income people, especially those who've lost jobs as a result of the coronavirus. The Republicans, on the other hand, would like to use fiscal stimulus to put money into the pockets of corporations and small businesses so that they don't go bankrupt and they can continue to support the economy when the coronavirus has gone away. We also have the fiscal stimulus supporting a much higher level of corporate profits than you would have had otherwise. Otherwise, there would have been massive bankruptcies and the stock market would have crashed. Another source of uncertainty, and this is one that I would suggest everyone keep their eyes on, is the role of corporations in the economy. In recent decades, corporate profits as a fraction of GDP have been growing, and there's a big debate as to why that growth has occurred. It's certainly related to the value of intangible capital that includes internet know-how and technology that exists inside corporations. But people on the left think that this high level of corporate profit should be offset with very high taxes on corporations and very high taxes on higher income people. An alternative approach, however, is to pursue much more aggressive antitrust policy. And Biden had campaigned on a promise of raising taxes on corporations and wealthy people. Given that the Senate may not go along with the high taxes, one thing you might look for is more aggressive antitrust policy aimed at the many of the big companies, probably the tech companies, probably the growth stocks. And the final source of uncertainty I wanted to mention is the savings glut. There's been a high rate of savings in the world economy for decades, and that has allowed governments around the world to run very large deficits. But at some point, that savings glut will kind of be exhausted and real interest rates will start rising. We just don't know when that will occur. It's one of the uncertainties in the background that's affecting stock market volatility. So when we look at the Biden victory and we look at the volatility in the stock market, What do we expect to see? Well, I expect to see Biden attempting to defeat the coronavirus with policies that look more like what's happened in Europe, but Europe hasn't been so successful. What has been successful is the policies in East Asia, Taiwan, South Korea, for example. I don't know that the United States will be able to pull those policies off even with a Biden presidency, because Europe has not been able to pull those policies off either. So with the Senate close and with all the uncertainties unfolding in the stock market, where do we stand? We see the debate over fiscal stimulus continuing, we see the debate over vaccines continuing. We see the coronavirus still raging, and we see all these uncertainties: the coronavirus, monetary policy, fiscal stimulus, the role of competition in corporations, the savings glut, and tax policy, all in the background, all somewhat uncertain, but it's been clarifying recently and clarifying in a way that the stock market so far likes, and we'll see what happens in coming months. Keep in mind, the stock market's at very high valuations, and there's potential for it to go down if the economy sours. Thank you.